Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, it's been a very, very long time since I've listened to anything that Dave Ramsey has said or suggested, but I've been getting an overwhelming amount of comments on my channel basically about my opinions on what Dave Ramsey is currently saying on the housing market. And I'm hoping that this is going to be the only video that I ever do about Dave Ramsey. I really don't like speaking negatively about people. That's absolutely no way to live life. But because he's such a massive influencer, I think it's important to go over what he's saying and what he's talking about. But I stopped listening to him as soon as I learned that he actually tells people don't use credit, use cash. Instead of teaching people how does credit work and how to better your spending habits, he says don't use credit at all. I believe that we should educate people instead of blind people. So I'm really turned off by all of the things that he says and that he does. But regardless, we're going to analyze a recent video that he's released on his YouTube channel that's titled, "Is the Housing Market Going to Crash? Ramsey Real Estate Reality Check." So after I painstakingly went through this video and listened to what he's saying, I've come to my own conclusion that Dave Ramsey is actually an institutional investor who owns hundreds of millions of dollars worth of real estate. But not only that, he's on one hand saying that people are paying too much money for houses, and on the other hand, he's saying that it has never been a better time to buy real estate. The man is using data that is not relevant to the current problem that we're in, and he's refusing to use data that is relevant to the situation we're in. But you guys, what I'm going to do is try to keep my opinion out of it until the end. I want you guys to essentially make up your own minds, look at the data. As Dave Ramsey said, he's all about the data. So I'm going to take what he's saying, and then I'm going to pull up the reality of what is actually going on with, as you guessed it, data. And I'm going to choose to use data that's relevant to what is going on right now instead of data that is not relevant to what is going on right now, like he loves to do. But the big shocker for me, you guys, the guy's an institutional investor. I just thought he was some pastor giving horrible credit advice. I had no idea the magnitude of how high Dave Ramsey has soared. It's absolutely unbelievable, and I absolutely think the way he's getting his point across in his narrative is absolute garbage. But remember, I'm not a financial advisor. My bio is husband, father, renter, victim of bad decisions, 2008. Yes, my work bio is realtor, loan officer, instructor in all things real estate in Texas. Nevertheless, this is my personal YouTube channel. You guys, I work hard to get you data and bring you content every single day. So if you could please like this video, subscribe if you haven't, and shoot me a comment below. But let's get started listening to this video right now. All right, let's start right now with listening to what he has to say. By the way, I love it. I absolutely love his production studio, just not what he's saying. Let's listen.
If I buy a house now, is it a mistake because the housing market's getting ready to crash and I could have got a better deal later? Or if I don't buy now, is it going to continue to go up and I'm going to get completely priced out and I don't know what to do? And there's just all of this angst and worry and fear and anger. It's all over the place. We're hearing it on our radio show, The Ramsey Show. We're seeing it in our social media comments and the people coming at us. And some of them are angry at us just because we dare to say it's going to be okay, because it is going to be okay. And people are making decisions right now. It's pretty scary. Real estate market's a lot of rumor, a lot of speculation out there. And there's a lot of stuff flying around the internet. Abraham Lincoln once tweeted, "You can't believe everything you see on the internet." So if there's an economist that's not an economist on Twitter, just calm down. Let's look at actual data.
Okay, so it's not going to be okay if you get trapped upside down in your house and caught in a foreclosure like what happened to me. But what he just ended on saying is we're going to look at actual data. And he also was pretty offensive to people that are predicting that the possibility of a housing market crash like myself, even though he's playing an economist himself on YouTube. Anyways, let's just go ahead and look at the data, but remember what he's saying. Let's look at the data. Let's continue.
Or did you hear about that house? The guy sold his house, $200,000. over asking, over appraisal, with no appraisal and no inspection. Did you hear about that? Well, that might be true, but that's not an indication of actual value. That's an indication of someone moving into that market that had a lot of money, was in a hurry, and got freaked out and overpaid for a house.
Okay, so I just want to point out before we really start digging in, he just said that people that were overpaying are going over appraisal value, over asking price, are overpaying for houses. He himself just now said people are overpaying for houses. So on one hand, what we have is him demeaning people that are speaking against what he's saying. So number two, what we have here is him saying how important reviewing data is. And then number three, what we have here is him saying essentially that a lot of people, pretty much anyone that overbid, was overpaying for houses, which I would absolutely agree with him on that one thing. Let's keep listening because this next part is especially spicy. And when I first realized Dave Ramsey is actually an institutional investor, listen to this.
Perspective. It's because of perspective. When it comes to real estate, my perspective comes from data. I own several $100 million worth of real estate. I own several $100 million worth of real estate, $100 million worth of real estate. And I've been buying and selling real estate my whole life. I got my real estate license and still have it 44 years ago. I grew up in a real estate person's household.
Okay, so David Ramsey, on top of everything I just listed, also owns hundreds of millions of dollars worth of real estate. So if we take the average median home value, let's just say, let's go above the average median home value. And let's say the average home that he's owned is 500,000, which I could almost assure you it's not. But let's say 500,000. That means that he owns roughly 400 homes, right? It's probably much more, but at minimum, if we take $500,000 median home value, this man owns 400 homes. Isn't he an institutional investor? This man owns 400 homes. Do y'all see this now? I never knew how far up the ladder he actually climbed. I can't believe this. Let's keep listening to what he has to say, and then we're going to really dig into this.
I can convince you that the way we're looking at the data is correct. Okay? Tonight is our real estate State of the Union. This is what's going on today and what we see coming and why we see it coming. And then you can draw your own conclusions from the data. We've certainly drawn out.
So we get to decide, right? We get to decide based on the data, the biased data that he's using. And towards the end of this video, I'm going to break down his data and I'm going to break down all of the things that he's saying that is absolutely not true. And then I'm going to point out the data he's completely ignoring. But let's keep going through this video right now.
Projected not 29 or 18 in 2022. We're projected to be 8% this year. And they're projecting, all the economists that are looking at this, a 3 to a 4% increase next year.
Okay, so to be clear, Dave Ramsey is expecting that this year home value is going to go up on average 8%, and next year in 2023, 3 to 4%. Even though we've finally had our first decline of 0.7%, so not a full percent, I get it, but it should be trending downwards. Its trajectory should remain the same, which is a downward trajectory. But regardless, he's still saying 8% this year, 3 to 4% next year. I just want you guys to see that, and I want to point out what he's saying to so many people. This man is he's so influential. And if he's wrong, imagine all of the lives he's going to ruin. And I would expect someone with such influence as him to side with caution. Why he doesn't? Maybe it doesn't pay well. I don't know. I have no idea. But let's get back to the video right now.
A pretty simple formula. Real estate is for sure a supply-demand price. Pricing in real estate, one thing drives house prices at the end of the day: supply-demand. When demand exceeds supply, house prices go up. Like we had these huge number of people come out after COVID, boom, we had a 29% increase. In order for prices to go down, supply has to exceed demand.
Okay, so that's pretty simple, right? So his argument here is going to all be surrounding supply versus demand. The only problem is with his theories and his explanations is this housing market bubble was not created because of supply or lack thereof supply. It was created because of demand, and he fails to acknowledge the reason for the demand exactly, which is PPP loans, stimulus, super low interest rates, actual lockdown, things of that nature. But let's get back to the video, see what else he has to say right now.
Data, and this is the data I want you to pay attention to, so you can decide now where you want to go from this. All right. Now, current supply is about half of what it was in 2007. Dave, it's just like 2007. It's just like 2008. The market's going to crash. It's too high. It's too high. It's going to go down. What a character. Well, there's 3 million houses, almost 4 million houses for sale in 2007, and there's about 800,000 for sale right now. So our current supply is approximately 1/4 of what it was in 2007. Building starts also in 2006 were about 2.1 million. And this year, they're going to be about 1.38 million, about 1.4 million. So about half, a little more than half on that. So used housing, guess what? New housing. And new housing got totally disrupted, right, with all the supply chain stuff. The factory shut down with the COVID suppression, the economic suppression associated with quarantine, and we didn't have lumber. And so lumber prices went crazy. Now, lumber prices on new housing have averaged in about the mid 600s for a long time, for decades, right? So
first of all, that's not decades. That's actually less than a decade. If you look, that's to 2017. But I think it's really important to note that. So basically what I'm gathering so far, other than what I've just listed about Dave Ramsey, is he's one of these people that is, if we don't have supply, the market cannot crash. He does not go into the overwhelming demand, nor is he going to go into overwhelming demand throughout this entire video, which, by the way, got almost, I believe, 300,000 views. So there's no talk of stimulus. There's no talk of PPP. There's no talk of what happens when you remove those things from the housing market, right? There's no talk of the artificially created bubble that the Federal Reserve made because of all of these things. There's no talk of it. He's just simply staying in his, if we don't have the supply, it can't crash. I don't care about anything else. But the reality is, this housing market bubble and the housing market that we have right now, we've never experienced anything like this before. So you can't always use the same type of data to have the same type of conclusion, because the bubble was made differently. Would you guys agree with that? But anyways, he's one of those, if we don't have supply, it's just not going to work. And I also don't like how he's showing how the starts are way lower than they were in 2008 or in that subprime collapse. However, they're still super high. So the starts of new construction, it's still super high. We're going to get a bunch of inventory there, as well as normal homeowners like we traditionally do. But again, what happened? The Federal Reserve opened the floodgates to demand. But regardless, I think it's important to notate where he stands on that. But nevertheless, you guys, throughout the rest of his video, he has so many errors with the data and what he's talking about. It's overwhelming. I don't understand how he has such a big following. On the graph, he just said decades, right? It's decades. But yeah, it's what, 7 years old? The graph is 7 years old. How's that decades? Decades is 20 years minimal. But anyways, let's get back to this video. Listen to this other crazy talk.
It's going crazy out there. Okay, so we're going to see all of those foreclosures come back into the market, but it's still not going to provide enough inventory to where we don't have this dramatic shortage. Now, we've got a dramatic shortage, not enough supply. And remember, supply has to exceed demand for prices to go down. Now, let's look at demand. Is demand going down? Well, one of the things we know is that the millennials have come of age. In 2007, 2008, the people in their mid-30s were Gen Xers. Today, the people in their mid-30s, prime home buying age, mid-30s, are millennials. And there's 5 million more of them than there were higher demand than there was during 2007, 2008. Higher demand, lower supply, higher demand. You see what's happening here? And then guess what? In addition to that, we've got 12 million more households in the United States in 2022 than we did in 2007. Today, we're looking at 128 million households. Back then, we had 116 million, difference 12 million. So we've got that many more people that have set up house that need a house. 5 million of them are millennial.
Okay, so his demand argument is millennials. The thing is, people have always wanted to buy houses, whether they're Gen Z, Gen X, millennials, whatever the generation things are. I don't even care. Everyone wants to buy a house. It doesn't matter if it's a group of millennials. His argument about demand is absolutely ludicrous. Now, I believe in the long-term run, yes, in the long-term run, a lot of millennials are in buying age. We're probably going to have a lot of them purchase houses, but nevertheless, to say that demand is still going up, is still high and trending upward is crazy talk. He uses absolutely no boots on the ground data, like touring data, searching for new homes data, sales being down, listings being canceled, contracts being canceled. He's not using any of the relevant data to what's going on right now. And I can assure you, he's wrong. Demand right now is plummeting. Demand is absolutely plummeting. But here's the thing, you guys, let's pull up the data, right? Because he's all about data. I want you guys to make your own opinion. Take a look at this data as it pertains to demand, because what I am saying, demand is being shattered, not going up, despite millennials. Horrible argument. Horrible argument. Take a look at this from Redfin. Okay, so despite what Dave Ramsey is saying, here's from Redfin, you guys, here's a chart, more price drops than any other time since 2015. Now, as you can see, this goes back to 2015 and it goes up and down. And then you see this massive trend. And this essentially is saying that there's way less demand because in order for people to sell their house, there has to be price drops. So there is a massive surge in price drops because there is a massive drop in demand. So that is why price drops. That's why we have had quarter over quarter of over 20% inventory growth on average. Demand is crushed. I can't believe what I'm hearing from Dave Ramsey. Take a look at this other chart about demand right now. Now, here's Redfin's home buyer demand index. Now, 2022 is the red line. Now, as you can see, as of about April, demand has been trending downwards. So despite these millennials, despite what Dave Ramsey is saying, he's wrong. Demand is going down and inventory is going up. As you can see here, this is relevant data. This is from Redfin. These guys have so much data on houses. It is absolutely trending downwards, despite what Dave Ramsey is saying. This is actual data, boots on the ground data. So I don't get it. On one hand, I understand what he's saying and I agree with him. People overpaying for houses and things of that nature, but I don't understand why he's picking and choosing other data. Just look at all the data and come up with a conclusion. If you don't talk about data, even if it contradicts what you're saying, you're a hypocrite, right? There's trends in the housing market that contradict what I was saying. Like when I mentioned mortgage applications going up, I said, yes, mortgage applications were going up. I also said, yes, rates were going down. And I gave the reasons why I believe that was happening, right? But to overlook the data, remove all the boots on the ground data and say millennials is why, that's crazy. Listen to what else he has to say right now. And he gets this totally wrong. Listen to this.
And so this is what's going on. We're seeing this pressure on demand. Add to that in 2007, 2008, we almost had zero institutional investors in the market buying up houses. Today, we've got these big conglomerates buying single-family homes like crazy. Last year, according to Forbes, they bought 28% of the houses that were for sale in America. And these are institutional investors taking these houses. They bought 28% of the houses that were for sale in America. And these are institutional investors taking these houses.
Okay, so Dave Ramsey just said that institutional investors accounted for 28% of housing. That's false. This man is taking such crazy data to create a false narrative. It is so unbelievable to me. I can tell you right now, institutional investors did not purchase 28% of housing. And regardless of what he's saying, institutional investors did have a heavy stake in our last housing market crash. He said institutional investor demand in 2008 was almost at zero. Take a look at this information from Redfin right now to show you guys what the reality is. The data that he's getting, I don't understand why people are letting him say this, right? It looks like he has a huge production crew. How are people letting him say this? I don't get it. We have the data now. There's no guessing. Take a look at this information from Redfin about investor demand right now. Okay, now let's go back to our last housing market crash in about 2008. So 2008, institutional investor, or this doesn't say institutional investor, this is just investor demand. So investor demand back in the last collapse was actually over 10%. And that's right here. So despite him saying it's zero, it's actually over 10%. Fast forward to today, it's only 20%. That's still a lot, but that's total investor. Here's the thing, okay? Total investor, 20%, not 28%. So that alone is crazy. He's saying 28%. The reality is it's actually 20%, but that's not institutional investor. Of the 20%, that's total investor. Most of those are mom and pop shops. Of the total investment, roughly 25% is institutional investors. So 25% of 20% is the reality of institutional investor demand. I'm now starting to understand where some of the comments that I think are absolutely crazy in my comment section are coming from. Now I understand what Dave Ramsey is saying is so inaccurate. It's crazy. Now is not the best time to buy a house. You can get trapped in it. Anyways, you guys, I'm sorry. I'm injecting my biasness here. I apologize. The difference between me and Dave Ramsey, at least I'm honest about it. Let's get back to this video right now. Listen to this craziness right now.
So you continue to see these price jumps in real estate, but that's a far cry from 2008, and we're going to see this huge drop that was unprecedented. The only time in the last 100 years or so, close to 100 years, that we've seen house prices go down across the board in the United States was during 2008. And it was
okay, so Dave Ramsey said the only time on average that the U.S. has gone down in home values is 2008. Here's the thing, y'all. He's absolutely wrong. I'm going to pull up Fred economic data, okay? Unbiased data, and I'm going to show you guys that there have been multiple times throughout the United States history where home prices have gone down, despite Dave Ramsey saying just now that we have never had but one time in 2008 that house values went down. You guys, he's wrong. Take a look at this graph that's listed in my description, by the way, so you guys can check this out for yourselves. I'm going to reference the data so that all you have to do is click it. But take a look at this graph right now, and you tell me if home values went down in the history of the United States housing market. Take a look. Okay, so here's the Fred economic data, median sales price of homes sold for the United States. And here's where you can actually customize the date. So let's start with the most recent drop in home values, which was actually in 2017. Okay, here's Q4 of 2017. So if we go to Q4 of 2017 to Q1, or say to Q2, boom, there's a drop right there from 337 to 315. Plus, if we want to kind of just extend it out, it goes into Q1 of 2019. So essentially from Q4 of 2017, where you guys are specifically seeing right here, home value on average throughout the nation, like he just said, from 2017 to 2009 Q1 went down to 313. So you guys, there's a drop right there. And that was just a few years ago, right before the pandemic. So right before the pandemic, home prices went down. But let's look at another era in the 1990s right now. Okay, so here we have Q2 of 1990. If you look from Q2 of 1990, home prices were 126,800. Boom, the recession hit, went down to 117. So from 126 to 117, again, a decline in value. If you look here from Q2 of 1990 to Q3 of 1990 as well. And it took a while for home values to get back up here. But again, you guys are seeing for yourself a drop. Let's look at one more error back in 1980 and be done with this, just because I want to prove to you that what Dave Ramsey is saying is wrong. Take a look at 1980s data right now. Okay, so here's 1980s data, and this is when they went into recession. So they went into recession, boom, home value went down, but obviously it trended upward. But nevertheless, he's saying never a decline in history. Q4 1980, 70,400. Q2 of 1982, 66,400. That's a clear drop. Regardless if it's a significant drop or not, it is a drop. So even though it may not be significant, it's a drop. So say it's a drop instead of saying there's never been a time. Isn't this guy, aren't we supposed to be able to lean on this guy to be forthcoming, to be conservative, to look out for our best interests? Do you guys see why I always tell you to make your own mind up? Stop listening to other people. It's because of people just like him. But listen to this last bit of craziness that he's recommending to all of his viewers. Listen to this last part. So before I push play, look at what he's basically going over for supply. Shortage of used inventory, home starts are down, foreclosures have been down. Here's the thing, we're not in a supply problem, right? A short-term supply issue. We're in a short-term demand issue and demand bubble. And look at what he's referencing in over demand. Millennials and institutional investors. This is wrong right here. It's 20% investors. That is plummeting right now. He's not talking about how much home sales have plummeted. Construction has sales have absolutely plummeted. Contracts have canceled. Listing price drops. Why is none of that data under demand? Why is it just millennials? That's crazy. Talk about being biased about the data he's using to form a narrative. But listen to his closing line right now. This is crazy.
Going forward. So we want to get you towards that house. We don't want you to do it crazy. We don't want your emotions to keep you out of control. Supply demand is not going to allow this market to crash. If you purchase properly, this is one of the best times in history to buy right now. A lot better than a year ago.
This is the best time to buy in history. Let me explain to you what you get when you buy a home right now. If you jump the gun and purchase before the dust settles, you're going to get a home that maybe you're probably going to settle with, even though inventory has surged. You're probably going to have to settle on something. So you're going to settle on something that's overpriced, and you're going to have a high interest rate with an inability to refinance or sell your house if there's negative equity growth, which essentially means what you get when you buy a house right now is you get to be trapped. And when you're trapped, the possibility of foreclosure is knocking at your door. How do I know this? Because it happened to me. Now, maybe Dave Ramsey gives great advice if you're a multiple millionaire, if you're pushing $1 billion worth of assets. Maybe his advice is good, but I'm talking to first-time home buyers that are essentially at risk of listening to people that give absolutely garbage advice, like Dave Ramsey and a whole bunch of realtors. Either way, you guys do me a favor, comment below. Let me know if you agree with what I'm saying or if you agree with what Dave Ramsey is saying. Other than that, I really appreciate you following along with me on this video. If you're out there investing in real estate, I do wish you luck, and I hope you win.